Okay, so I wanted to talk to you next about the importance of a common data framework. So I think Jeremy mentioned earlier on that we've pre-configured our system for IFRS 17. What that means is we've been working with the IFRS, the IASB and the various advisory firms. We've obviously understood the standard, but a bit more than that, we've worked out how it should be operationalized. For us, that means what is the data requirements, what kind of actuarial processes need to be applied on that data, what are the accounting rules and calculations that need to drive the journals, what are the journal patterns, how does that need to be structured in the sub-ledger, and then ultimately, how does that map into the reporting and the IFRS 17 disclosure? So we've kind of understood that. Obviously, we understand that, the IASB is meeting this week to discuss further changes. So the standard is still evolving, but we have a base configuration and we're well placed to understand and quickly change our configuration as the standard evolves. And I think as we've seen from, previous IASB meetings, the fundamental principles of the standard are not changing. It's just some of the particularities. For example, in this case, they're discussing reinsurance and some of the acquisition costs. So just take a step back. So IFRS 17, compared to current accounting, say for like gross written premium, there's a very easy link between items on the financials and underlying source systems. That's not the case in IFRS 17. It's a long journey from data to report. So if we think, taking data out of source systems, there'll be transformations required. Some of that needs to be run through actuarial analysis and models. Ultimately, we need to get to cash flow models. Some of those cash flows need risk calculations applied to them. There's discounting involved. All the cash flows have to be grouped into the unit of accounts and the CSM. That has to be measured and remeasured, translated to accounting movements, put onto journal templates for the debits and credits. They go to the ledger, so we need to track the balances, and all of that needs to be reported and analysed, and that mapping is far from straightforward. And what we need to think is all of that needs to be reconciled, and that reconciliation needs to validate the information in terms of your internal and external stakeholders. So what we believe is very vital in your IFRS 17 solution that you can track information through this process and make sure that along the way you can validate to yourselves and relevant stakeholders it's correct. And that's something we very much have in the DNA of our solution, and something that I want to talk to you a little bit about today. So if we think about the past, so a lot of data sat in the actuarial space, sitting inside actuarial models, and then in the transactional world, a lot of information was managed in finance. And these worlds were a little bit separate, and people often talk about silos of actuarial and financial information. So IFRS 17 is a big opportunity to sort of bring these worlds together. So with the accounting engine like Legerity, you will be bringing in data from actuarial and finance in your data load. You'll be applying that in an integrated calculation engine and posting to a shared subledger. And all of that information can be stored in an actuarial and finance data store. So that means we can start to think about actuaries running actuarial reports from the solution, including finance information like CSM balances, and finance people running finance reports on say disclosure reports, but including information about actuarial assumptions. So we often talk about the kind of benefits of IFRS 17. This is maybe not a full transformational benefit, but certainly something that would form part of what we would call compliance plus a benefit of your IFRS 17 solution, a very important one to think about. So if we think about the data types, well, we've got the basic policy information, the coverage periods, how it's going to be grouped, etc., and the journey of the policies. You've got things like cash flows coming from actuarial models, deterministic projections. You've got risk calculations coming that were needed for the risk adjustment. We have things like market discount rates, yield curves that may be complex to calculate, different methods of releasing for coverage, so drivers around coverage. Obviously, multi-currency world, you need currency rates. And then, of course, you have all your transactions, premiums, claims, etc. So that's broadly talking about the data types, but it's a big subject, data. And obviously what data you need and how it's going to flow through the solution is going to depend very much on how you architect your overall solution. So what we've done at the top in this table is represent some of the key processes on that journey I talked about. So modeling and risk, cash flow preparation, discounting up to disclosures, etc. And what we're seeing is different insurers are taking a different approach about where information is handed over on that journey. So for example, a use case one, actuarial function would traditionally do modeling and risk analysis, but then in this case, they would prepare the CSM cash flows, but then hand over to the IFRS 17 engine for discounting and managing the process to disclosure. Then say in a use case three, the actuarial process might go a step further and actually do the discounting and hand over discounted cash flows to the CSM engine. And then you can see we've seen some other more extreme examples, say use case two, where the CSM is being fully managed in the actuarial department, or in the use case four, more typically say London market style insurers, where parameters are produced from the actuarial world, but the whole mechanic of preparing the cash flows and discounting be managed in the IFRS 17 engine. So the implication is that the data volumes and where they're stored in the IFRS 17 engine or not in the actuarial world is obviously has a big impact. So if you're handing over cash flows for discounting to IFRS 17, there's a lot of data to transfer there, and it'll be stored in the IFRS 17 engine, so giving you a good integrated view, whereas maybe in a use case three, more of it sits in the actuarial world, but then the data transfers volumes are different. So deciding on your data architecture is a very important consideration early on when you're thinking about what data sits where and what needs to be moved around and stored in different parts of the solution. So if we think about the data framework, well, it's initialized by a policy, and once a policy is written, the standard talks about recognizing the three main building blocks. So we have the future cash flows, the risk adjustment, and the CSM, the grouping of the contracts into the CSM. And then as the policy and policies progress, there'll be transactions. So we've grouped into 5 major categories: the acquisition costs, the premium, claims, other expenses like taxes and underwriting administration costs, and where there's investment components, transactions associated with those. So there are, of course, many types of transactions, but we believe these 5 represent 5 major groups that each have different calculations and different data requirements and different accounting. So with all that we need to think about how we're going to recognize in the financials. So building blocks are quite representative of some of the major balance sheet items, but in IFRS 17, I think compared to before, it's quite focused on the P&L and how the P&L is built up. So we look at different categories of items within the P&L. So we have our revenue build up from our expected cash flows coming from the future cash flows. We have expenses coming from our incurred claims and other expenses. Amortization of acquisition costs covering revenue and costs. We have the release of the risk adjustment to revenue. We have release of CSM as coverage is provided to revenue. And indeed, we may even have a loss, so we need recognition of loss and unwind of loss component. And then there's all the financing aspects, which could go to P&L or OCI around rollover, any change in the rates, and of course, accreting interest on the CSM. So we've reduced the standard down to these components, and this is what we're calling our overall data framework. So we're able to look at each of these components and consider what are the data requirements that are driving that component. So let's give us an example. So the policy, major, fairly straightforward initializing event. So at that stage, we would book all the relevant reference and information about the policy. But I think at that stage, we could also think about the kind of data around configuration, so rates, calendars, chart of accounts, and things like that. So we can visualize the policy as representing the setup information. Then if we think about another thing, the future cash flows, so upon initialization of the policy, we need to forecast our cash flows and capitalize the future cash flows. So what kind of data are we going to need for that? Well, it's going to depend on the use case. So as I talked about before, the handover of the cash flow information for different use cases varies the data enormously. So what we have done is categorize the data types and what they might look like into the different use cases. So we can understand, depending on what kind of use case you go for, what kind of data due to manage and hand over into the accounting rules engine. So if we think about an event like incurred claim, well, we would have claim information coming from a transactional based system, maybe in a annuity type policy where it's fairly straightforward what the claim is, going to incurred service expenses, but maybe in some other more complex insurance contracts, the claim could come from an actuarial system when we're not sure about what the actual claim is or even has it incurred. So those different, depending on the type of insurance, we might get our incurred claims from different places. But then thinking about the revenue side of an incurred claim where we're releasing premium to revenue, they would come from the actuarial model because we need to get the expected amounts that are driving the underlying future cash flows. And then if we think about the CSM releasing for coverage, well, it's quite a complex calculation with many different variants. So again, we need to think about our use case. So what is the relevant use case? So say, for example, a use case 1 where the engine is doing the discounting. And then what kind of product is it? We might have different coverage methodologies for different products. In this case, say we're looking at annuity. And then what kind of method have we chosen to release the CSM as coverage is provided? So there could be a number of different ones here. We could have selected benefits paid basis, so looking at future benefits and releasing as benefits are delivered to the customer. And a good example of data, therefore, would be future claims cash flows coming from the actuarial model, and of course, locked in yield curves for discounting. So we'd be able to calculate the CSM release based on discounted future cash flows. So data is a large and complex subject. Many things to think about. Data is going to be linked to decisions on systems architecture, business and accounting policy choice. And it's not just about pulling source data from underlying source systems, it's all about process data like actuarial data. It's not just about data inputs, but managing the overall data from load all the way to disclosure. So it's very important to break it down into a manageable framework. So and that's what we believe we can really help with our data framework, breaking it down into these components that allow you to then build up your data definition and proceed smoothly through implementation. And indeed, when we look at our proof of concepts later, this is something that the proof of concept really kicks off, is help you to start on that journey of thinking about data definition in relation to the kind of solution that you're looking to build.